What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So let's think about this. I like high yield dividend stocks, high yield dividend REITs. Some of them aren't going to cut it. And really looking at REITs, mortgage-backed REITs that I invested in over the years, there's some that didn't cut it. And they're not reliable. And I'm telling you, they're indecisive. I think they're when it comes to decisions with investments, with their company, they're indecisive. I don't think they provide any value to my dividend portfolio. Yes, they're a high yielder, but they're not very good. And AGNC is one of them. So I'm going to go over the trends. I'm going to go over their history. And I'm going to show you some nasty things with them that you don't want to deal with. Now, it's like that thing at work, your one job. Things are going to get better. You're told things are going to get better, but the actions don't add up. Somebody tells you they're going to call you or do this and that, but they don't. It's a little indecisive, okay? It's not decisive. That's not consistent. Those are red flags. Consistency is a good thing. Being inconsistent, is not good. That's a red flag when it comes to dividend stocks or REITs. So we're going to go over AGNC. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out this REIT right now. So I'm going to start in the past 5 years, okay? It's sitting at 1037. The average volume is 15.77 million. The market cap is 8.11 billion US dollars. Year range is 681 to 1085. Day range is 1026 to 1037. Previous close is 1030. Now let's go from the max. Since inception, it is down 48.12%. For a REIT, hasn't done well. That's not a good sign. So I'm going to go over the nitty and gritty in that with them as well. Investment portfolios, 98% comprise agency MBS assets, including pass-through certificates, collateralized mortgage obligations, they call it CMOs, and to be announced securities called TBAs. These assets benefit from a guarantee from Fannie Mae, Freddie Mac, or Ginnie Mae, which is substantially eliminates credit risks and protects us for our event borrowers default on their mortgage payments. We also allocate a small portion of our capital to non-agency investments, including GSE credit risk transfer securities, CRT is the abbreviation. While these assets are not our primary focus, maintaining these investment capabilities provides meaningful flexibility in the event of significant shifts in market opportunities. Let's go a little bit more over them. I'm going to go over their financials. All right, 2013, annual data millions US dollars. Now, again, FFO is very important. Funds for operations. Okay, that's very important. But let's look at the revenue trends. So 2013, annual data in millions US dollars. 2093, 2014, 1,472. 2015, 1,466. 2016, 1,321. 2017, 1,293. 2018, 1,949. 2019, 2,842. 2020, 1,519. 2021, 1,361. 2022, 1,590. 2023, 2,041. Let's look at a few more things. So this is where things are not very good, the way I see things. So I'm going over quarterly statements. This is annually in millions US dollars, and I'll confirm it real quick. Right here, quarterly data, millions US dollars. 2022, 395. That's 630. 930 in 2022, or September 30th, 373. 2022, 1231, 347. 2023, 331. That was $351. 630, 2023, 457. 2023, 930. Okay. September 30th, $593. 2023, 1231, 640. 2024, 331, 642. 630, 2024, 695. But if you go back, okay, to the yearly trends in 2013, that's a problem. Why was it down when things weren't, there was no pandemic or anything? So that's one thing that threw me off. The other problem is a decrease in price per share. People's confidence is not doing well in there. And you saw with medical properties trust what happened. The price per share went down. They got a lot of issues. And you need to study the dividend history and go far back with a lot of real estate investment trusts, and you're going to get your answer if they're worth your time or not. They're worth your time, money, effort, and energy for research before you make your due diligence and buy them. So you have to look into things. Let's go over that. So I'm going to start 2016. Okay, let's look in July and August, 20 cents. That looks good to me. Then 2016, they decreased to 18 cents. Still stagnant at 18 cents. 2019, 2020, 2019. Oh, wait. Before the pandemic hit, 18 cents to 16 cents, May to June. 2020, okay. 16 cents to 12 cents. So right here, April to May, okay, you can blame the pandemic. 12 cents. Their revenue has increased, and they're still at 12 cents. Their dividend yield is 13.98%. Their price per share has gone down. Dividend growth in 5 years, negative 3.07%. So again, 12 cents. Let's go back down here. Okay, you can blame the pandemic, but they have not raised their dividend to 16 cents. And even worse, again, 20 cents to 18 cents to 12 cents. So you're actually having a decreased dividend over time. Price per share has gone down. You're getting a decrease in the dividend. So you got to study trends when you look at REITs, specifically mortgage-backed REITs. So I like Arbor Realty Trust. I will do a in-depth video on them very soon, a remix. I'm doing a remix on AGNC because I need to start adding. I promised you I'd do videos on stocks, REITs, things that are that I need to review in depth. Now this wasn't too in depth compared to the previous one that I did, Four Corners Properties Trust, with a REIT as to why I'm buying them. But this one, I want you to see the trends. 12 cents. Now, some people use AGNC to buy dividend growth stocks, the income of AGNC to buy dividend stocks. I've seen that. SDIV, people do that. USOI, I've seen people do that. I mean, I use the Yieldmax ETFs to do that. But again, there's a lack of consistency with the Yieldmax ETFs. Actually angle this a little bit more, as well as AGNC. And when there's a lack of consistency, that turns me off. That's, if you're dating somebody or considering dating them and they're indecisive, they're not consistent, they don't follow their words, they're out. I'm not dealing with you. You're out. Same thing when it comes to REITs or it comes to dividend growth stocks. There's a lack of consistency. They do not They are not in my dividend portfolio. They can be in yours, that's fine, but they are not in mine. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you on Saturday. That'll be a big day. Go Bucks. I'll be watching the Guardians play. This video is a day earlier, but I'll be watching the Guardians. I got my game day glasses, and I'll be walking downtown to watch the game and go from there. But again, consistency. You got to be consistent. If you're with the job, you got to be consistent. When you go to the gym, you got to be consistent. You want to get results, consistency. Think about that when you look at dividend stocks. You guys take care and have a good one, and it's time for my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Don't use my social media posts or any of my YouTube videos as financial advice or tax advice. It is best to seek financial advice from a financial advisor and or a tax advisor. Investing is a big risk. You can gain money, you can lose money. So be aware and do your due diligence, especially if you're interested in buying AGNC. You do not have to make any investments because I do. This is strictly for entertainment purposes only. Take care.